Hey guys, welcome back. I hope you're having a good morning. We're going to take you through the trade setup right now. We have Vivek as well as Nigel joining to help us in with how things are looking. Guys, a very good morning to both of you. Vivek, we were just going through the global market setup a while ago, and that at least looks quite positive. Sorry, Sudarshan. It's Friday. It's towards the end of the week. Please excuse me. We have Sudarshan joining us. Sudarshan, the global cues at least look very positive this morning.
Morning, Pavitra. It looks like we'll start last day of the week on a positive note. The cues from global markets are largely positive. US market, which was trading in a narrow range for large part of the day, saw a sharp surge in the last hour, and that helped all major indices close with gains. And S&P 500 has posted record close for 11th time in last 2 months. Talking about our market, while Sensex and Nifty have closed with gains, but they have underperformed broader markets. Both mid-cap and small-cap index have posted gains of 1% each against a gain of 0.3% for both Sensex and Nifty. So what is propelling this outperformance in the broader markets? That is continued buying in PSU companies or say government companies. In last 1 month, Nifty PSA index is up 15% and PSU Bank is up 21%, while Nifty 50 has given negative returns in the same period. Coming to institutional activities, FIs have sold shares of more than rupees 3,000 crore, and it was largely offset by DIIs, which bought shares of rupees 2,300 crore in the cash market. Now comes an important data. On your screen, you can see the number of stocks that have been in F&O ban on a daily basis. This week, on an average, 12 stocks have been in F&O ban on a daily basis. And mind it, it's a huge number. So what does it indicate? It tells you the volatility and wild move that many stocks have been seeing in the last few days or say last few weeks. Lastly, cues to watch, we have India's forex reserves at 5 p.m. and US producer price index for January at 7 p.m.
All right, got that. So that is everything that you should watch from an India market standpoint at the start of the trading session. Sudarshan, thanks a lot for that, but also take us through, some of the stocks that could be in focus in today's trading session. The earnings are out of the way now. So what else is making the news?
That's right. So that's the reason number of stocks that I have has decreased significantly. So first I'll start with ONGC and Reliance. Those stocks will be in focus because government has increased windfall tax on diesel to rupees 1.50 per litre from 0. And windfall tax on crude petroleum is increased to rupees 3,300 from rupees 3,200 per ton. UPL, Fitch has downgraded rating to BB plus and outlook is negative. Dilip Bilcon, JV is declared lowest bidder for a dam project worth rupees 413 crore. Indigo and SpiceJet will be in focus. January air passenger traffic is up 4.7% year-on-year. Indigo has held on to its market share above 60% and SpiceJet's market share is unchanged month-on-month at 5.6%. Lastly, Max Fin and Axis Bank will be in focus. Both the companies have issued clarification on Subramanian Swamy's plea in Delhi High Court. Both the companies say all the approvals were taken for Axis Bank and Max Life deal and there is no legal or regulatory anomaly in the transactions.
All right, got it. Sudarshan, thanks a lot for taking us through that entire list. We are going to watch for all of these in today's trading session. Finally, let's also bring Nigel in. He's looking at all of the cues from the futures and options space. Nigel, good morning. How's it looking?
Morning, Pavitra. On a lighter note, Pavitra, if Vivek was a stock that was listed, he would hit upper circuit, That Pavitra was just calling out for his market cue. But anyways, that's on a lighter note. Let's get to the market action. Yesterday, we had the Nifty and the Nifty Bank, both of them. They moved up and clearly there was short covering that was seen because both those two indices ended higher. And on the Nifty Bank in particular, for the second day running, you had a big short covering bounce that played out. And the FI data, it tied in with that because they covered more shorts than longs. So, in yesterday's trade, close on 7,500 contracts is what they covered. And the net change was close on 5,000 contracts. So that's where the net short positions from around that 80,000 odd has come down to around 75,000 contracts. On the option side, there appears there's a short straddle at play. What is that? You write the strike, 21,900 call as well as put. So the same strike, the call and the put, you pocket close to around 350 rupees approximately. And you're looking at a range. On the downside, 21,550. On the upside, 22,250. That's the broad range you're looking at going by this strategy. That's a short straddle at the 21,900 odd mark. It appears so that, some traders are playing for this range. The Nifty Bank, now that's done well. It's protected the 200 DMA. It's got past the 20 DMA. Can it move to the 50 DMA? And that chart comes up for you on the screen. So let's see whether or not that happens. It's going to be an interesting trading session. Last couple of days have been good. Can the bulls drive home the advantage and say, conquer the 22,000 odd mark? Stay tuned for that. Yesterday, they gave it a bit of a fight, but faltered towards the end. Back to you.
All right, let's see if we can get to that today. Nigel, thanks a lot for taking us through all of those cues. We need to get into a short break now. But on the other side, we're going to shift focus and talk about the commodities. We'll tell you what's going on in just a bit. Stay tuned.